The global economy is like a giant ship. It's important to know where it's headed. Experts at the IMF and OECD give us a peek into the future. They predict global growth of around 3.2% in 2024 and 2025. That's like the ship sailing at a steady pace, but hold on. Different regions are sailing at different speeds. The US economy is projected to grow around 2.8%. The Eurozone might see faster growth in 2025. China and India remain the powerhouses, driving much of the global growth. Keep an eye on these economies. This growth isn't without its bumps. Interest rates, inflation, and geopolitical risks are like rough waters. They can slow down the ship. Understanding these factors is key to making smart trading decisions. Don't worry, we'll break it all down for you. It's all about making money, folks. And knowing where the global economy is headed can give you an edge. Stay tuned for more insights. Inflation is like a sneaky thief. It eats away at your money's value. The good news? Experts predict inflation will cool down from its high of 6.8% in 2023. They expect it to be around 5.9% in 2024 and 4.5% in 2025. But here's the catch. Services inflation is sticky. Think about things like haircuts and healthcare. These prices don't drop easily. This makes it tricky for central banks, the folks who control interest rates. Central banks are like the ship's captains. They use interest rates to steer the economy. When inflation is high, they raise rates. This is like tapping the brakes. When inflation cools down, they lower rates. This is like stepping on the gas. The big question is, when will they start cutting rates? Some experts predict the Fed and ECB could start cutting as early as June 2024. This would be good news for borrowers and could boost the economy. Global trade is like the wind in the sails of the global economy. After some choppy waters, trade is expected to rebound in late 2024. This is good news for companies that sell their products overseas, but it's not all smooth sailing. High interest rates, stubborn inflation, and geopolitical tensions are like headwinds. They can slow down trade. That's why it's important to stay informed about these factors. One bright spot is the rise of digital trade. Think about buying stuff online from another country. This is becoming easier and more common. This trend is creating opportunities for businesses that can adapt. So, what does this mean for you? Keep an eye on companies involved in global trade, especially those embracing digital technologies. They could be poised for growth in the coming years. Section 4. Geopolitical risks, navigating uncertainty. Geopolitical risks are like unexpected storms. They can pop up out of nowhere and rock the boat. Think about conflicts, political instability, and trade wars. These events can send shockwaves through the global economy. Right now, there are several geopolitical hotspots to watch. The ongoing war in Ukraine is a major concern. Tensions between the US and China are another risk. These situations are fluid and can change quickly. Policy uncertainty is another challenge. Governments around the world are grappling with inflation, debt, and climate change. Changes in their policies can impact businesses and investors. The key takeaway? Stay informed about geopolitical developments and be prepared for volatility. Diversifying your investments can help mitigate risks. Section 5. Trading in the crosshairs of macro trends. Alright folks, let's bring it all home. We've talked about global growth, inflation, trade, and geopolitical risks. Now, how do you use this information to make money? First, remember that macro trends provide the backdrop for your trading decisions. They don't tell you which specific stocks to buy or sell. That's where your own research and analysis come in. Second, look for opportunities where macro trends align with individual company prospects. For example, if you believe global trade will rebound, consider companies that benefit from increased exports. Third, be patient and don't panic. Macro trends play out over months and years, not days or weeks. Don't make rash decisions based on short-term market fluctuations. Remember, knowledge is power. By understanding macroeconomic trends, you can gain an edge in the markets. So stay informed, do your homework, and trade smart.